Hey, what's up, everybody? Time for a video update. Yesterday, I didn't have time to get around to doing one because I was finishing up on MMT Trader, which I sent out to all subscribers and people on the email list. If you want to get a copy of this week's issue, and if you want to check out all the back issues, go to my website, pitbulleconomics.com, and right there on the homepage, it says get a 30-day free trial. What I want to start off with is a little political commentary, specifically talking about the two elections that occurred over the weekend, the German federal election and the New Zealand general election. First, in Germany, interesting outcome. All right, the ruling Christian Democratic Party, which is the party of Angela Merkel, they lost, they won the election, but they lost a number of votes in parliament. They lost 9 votes compared to where they stood in the last election in 2013. As for the second party, the Social Democratic Party, headed by Martin Schulz, they came in second place in vote percentage. However, they also lost 5 votes in parliament based on that election. So the two biggest parties, and really the ruling parties, which had controlled about 83% of the vote, or 81% of the vote, something like that, prior to this election, they got knocked all the way down to 53% of the parliamentary vote. Who won or who gained was the conservative, some call it a right wing, but it's a conservative AFD party. They represent a position of anti-immigration, anti-Europe, okay? And also I guess you would call the liberal or the left party, the FDP, I believe it's called. They picked up some seats. Now, what's important here is that Angela Merkel looks wounded. I think that she's going to have a tough time governing because now, together with that 53% of the vote, the Christian Democrats and the Social Democrats, and now the Social Democrats, this party, kind of that second place party, they feel burned because they went along with her. They were sort of like the junior party that always voted in favor or along with the policies that she wanted, which was massive immigration and this sort of neoliberalism. They feel burned. They took a hit in this election. They feel burned, and the analysis is that they're not likely to go along with her so blindly as they have in the past, and this is going to make it very tough for her to govern, and some analysts are forecasting now that she might not even last for the next 2 years. They might have to call another election. So what's happening right now is the re-emergence of political risk in Germany and the Euro area. That is why you are seeing the negative reaction in the Euro. And quite frankly, this could persist for a bit of time. I have to say that from a market composition standpoint, the Euro, you have speculators who are long the Euro. You have asset managers who are long the Euro. And we could really see this unwind now. So I think the whole thing is more technical in nature as opposed to really a fundamental shift, because let's face it, the policies in effect, that is austerity, ECB policies of negative interest rates, asset purchases, these remain in place, okay? So these are fundamentally supportive for the euro, but right now a re-emergence of political risk. And I should also add that we have the Catalonia referendum coming up this Sunday, where a vote which is declared illegal by the government of Spain. They've been rounding up people in Catalonia, just arresting them or trying to block or thwart this election. So again, there's nervousness and there's political risk, and it's all focused on the euro. And I think it can persist for a little bit of time, and we're going to see the speculators and the asset managers, maybe flip their position to short. Overall, in the big picture, the fundamental drivers, which are austerity, and let me just mention, nobody here is saying or suggesting at all that there is going to be an abandonment of the euro. That's staying. And the policies that are making the euro strong, which is this austerity and the monetary policies of the ECB, that it's not going to change. All right, so we're getting a correction. In New Zealand, sort of a similar outcome where you had the National Party, which was the leading party. They won, but not with a majority, so they're going to have to form a coalition government. So there's a lot of uncertainty there now, and you see the New Zealand dollar taking a hit. All of these two things are sort of drumming up U.S. dollar bullish sentiment, I would guess, or bearish sentiment in the foreign currencies relative to other currencies. And so that is what is causing this correction, upward correction in the U.S. dollar. By the way, in Japan, you also have Shinzo Abe calling a snap election next month. All right, so political risk has emerged outside the U.S. dollar, and that is causing the U.S. dollar, that is benefiting the U.S. dollar right now. But the fundamental drivers of the U.S. dollar, that is high government spending and the de-dollarization, which I was talking about, the weaponization of the dollar, the looking to for other countries are now looking to alternative payments and transactional systems because of the weaponization of the dollar by the current administration and even the Obama administration before. But countries just not having it. They're not having it. They cannot continue to operate with this risk hanging over their heads. The sword of Damocles. Now, this is not something, this is something that is a very, very macro long-term thing, all right? So you're going to have to expect you're going to see these back and forth trading action in the currency markets. And right now we have a positive dollar scenario, and it could carry a little bit. As far as gold, we have seen right now a 30,000 contract reduction in open interest in gold. So we know that the speculators have been liquidating their longs. We needed to see that. So you got to buy this dip. The dip might also persist a little bit longer, maybe down around 1286, 1280 in the December gold contract on the COMEX. In oil, and by the way, you had guys like Dennis Gartman getting bullish on gold. Some of you were sending me emails about Gartman bullish on gold, Gartman bullish on oil. The kiss of death. That's the kiss of death. That's why we had to take profits. But if you didn't, you got to hang in there. Oil, I said yesterday, be ready to take profits. We get the API inventory report tonight. I'm looking for a big drawdown in inventories based on the fact that it would appear that the refineries are mostly back up in operation. All right, so we're gonna see some. We're gonna see the picture tonight, the snapshot of what's going on, and tomorrow, of course, the EIA weekly petroleum status report. If you want these updates, if you want more insight on what to do, I put out some recommendations yesterday and a couple of stocks. If you want some more insight, if you want some more recommendations, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. And while you're at it, you could sign up for zombie trading. We front run the zombies before they die. By the way, I said everybody should learn how to trade Forex. Even if you are a stock investor, you should still have the knowledge of how to trade Forex. Very important markets. Really, really the best markets in the world. And you can buy my Forex trading course. It's a 5-video, 25-hour Forex trading video course, intensive instruction with mental game teaching in there. Go to my website, pitbulleconomics.com, and click on the tab that says courses. All right? See everybody later. Bye-bye.